Since I'm a China economist by trade, I offer opinions about the Chinese economy for a living. One of the things that everyone wants to know is how fast is China going to grow? And actually, I thought it would be interesting for me to find out how fast you all think China is going to grow. So I'd like to do a quick poll for the room. I'm going to give you a multiple choice. So for the next 5 years, let's say 2015 to 2020, so the rest of this decade, what do you think the average GDP growth rate of China will be? So A, 8% or higher, B, around 7%, C, around 6%, or D, 5% or lower? Have a think. So how many hold to view A, that China will have 8% or greater growth? 2? Okay, B, around 7%. Many more here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay, around 6%. Nobody's raising their hand twice, are they? Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 looks like. It's pretty much a tie. All right. Okay, the bears in the room, reveal yourselves. 5% or lower. Anyone?
One bear. One bear.
Wow.
Is there an economist view of E between 5 and 8?
Between 5 and 8?
So
Yes, it'll definitely be between.
I hope this is not a critical question for Host Plus, because they're in big strife between Sam at one end and David at the other. What was the total, by the way, Andrew? Because I want to see how many multiple votes there were.
Let's see, I've got 29, 32.
32?
Yeah.
Oh, that's okay. We didn't get multiple votes. In fact, I think we had some abstentions.
Yeah, some abstentions, yeah. The abstentions were, that was wise. So I think one takeaway from this kind of simple exercise, right, is that pretty much everyone thinks China is going to grow more slowly in the future than it has grown in the past. Maybe this is an overly simple observation, but my task for this session was to give you some big thoughts about what China is going to look like in the future, so this is a good base to start with. So why do we think that China is going to grow more slowly in the future than the past? Well, one obvious reason, right, is just that China is a bigger, more developed, much richer place than it used to be, and so you just don't grow as fast once you've gotten to a certain size. You know, China is a multi-trillion-dollar economy now. It's much harder to generate high percentage growth rates off that kind of base. So that's certainly a factor. I think the real driver of the slower growth that all of us expect over the next several years, though, is really from the investment side of the economy. So again, very simple kind of GDP accounting. We economists like to put things in neat little boxes. So we have consumption, investment, exports, 3 parts of GDP. China, for a long time, has really just been the story of investment. So since I've been here, all of the economic changes that China has seen, and especially the ones that have had a lot of impact on the rest of the world, particularly commodity exporters like Australia, have really come from this stupendous growth in investment. So according to my estimates, if you look at the broadest measure of investment in China and make some appropriate adjustments for price changes, investment growth in real terms has been 15% a year for the past 10 years. The economy as a whole was growing by 10% a year over that period, which in itself is pretty extraordinary, but investment growth was 15% a year, so half again as fast as the overall economy. What's happening now in China is essentially the end of that super fast investment growth phase. So there was a huge spike in investment growth in 2009 when, as we know, the Chinese government was delivering a very aggressive stimulus to the economy. That year, investment growth spiked up to 20%, again in real terms. As of 2012, the latest year for which we have full data, it's down to 7.5%. probably stabilized a bit in 2013, and looks like it's going to slow down again this year. So say 7% investment growth this year, down from a peak of 20% and an average of 15%. So down by half from the average and down by a third from the peak. So it's a pretty severe investment slowdown. And I think really understanding that this is where China's slowdown is coming from is a lot more useful than just knowing that China's going to have slower growth. Because it's really the composition of growth that makes a huge difference. So in our research, sometimes we tell the story of the two Chinas, the investment China and the consumption China. And basically, you've had a boom in investment China for a long time now. That boom is sort of unwinding. The consumer part of the economy is holding up relatively better. And the combination of those two trends is what gives you essentially the overall growth rate. But it's much more useful and important to me to understand. It's not just that China's having a relatively modest slowdown from, say, 10% GDP growth down to 9 to 8 to 7. What's really been happening is a much more severe slowdown in the investment side of the economy. And if you understand that, it's easier to kind of understand the market dynamics that have played out over the last few years, and also to have a more accurate view of the future. I was asked to say a little bit about housing, and housing actually is a good example of this. If you want to take one sector as an example of this investment slowdown, housing is probably the best one, both because housing was the driver of so much of the investment spending over the past decade, but also because it kind of exemplifies this turning point that China has been passing through. So for a long time, the housing boom in China was just extraordinary. Housing prices went up every year. The amount of housing built went up every year. And the fact that houses were getting more expensive never seemed to stop anyone's enthusiasm for buying any of them. So housing sales went up, prices went up, supply went up in this virtuous circle. And to us, this is kind of seemingly miraculous phenomenon is easy to understand if you think that actually the problem in China was that there was an enormous shortage of housing. So China's only had a private housing market for about as long as I've lived here, since 1998. Before that, all housing was essentially supplied by the government. So once they opened up to a private housing market, there was a huge backlog of pent-up demand that needed to be met. The market went about meeting it. And the annual new construction of housing went from about 3 million units, I think in 2003, to by 2007, they were building 6 to 7 million units a year. And over the past several years, the annual supply of housing has gone up to 11 million units a year. And based on various fancy calculations, the details of which I won't bore you with, we think that the long-term sustainable demand for housing in China is on the order of 10 million units a year. So the transition here is very important. You've gone from one where demand was extraordinarily high and supply couldn't keep up, to one where demand is still pretty high, we think, but supply is now either equal to or in excess of that demand. So I think understanding that that we are probably pretty close to the peak annual supply of housing, that it's not reasonable to expect China to build really more than 11 million new homes a year. 11 million is probably plenty. And that probably there's been a bit of an oversupply. This helps us kind of understand sort of what's unfolding in the housing market now, and also I think allows us to have a more rational and kind of reasonable expectation of what the investment side of the housing and investment side of the economy and housing in general is going to deliver for the economy. So people obviously have very different views about housing in China. It's one of these things where you can have there's an enormous range of views. Our view probably falls in the more optimistic camp, and we think the level of fundamental demand is actually pretty high. Some people don't agree with that. They think the level of fundamental demand is much lower. But even on our more optimistic view, you're probably in for a period of essentially zero growth in terms of housing construction for a while. You can probably continue at a fairly high level, but in terms of growth, not a lot of additional extra there. And I think one of the other interesting dynamics from the investment slowdown is a change in let's say, the leadership of the Chinese economy. So to me, one of the interesting things that's been happening over the last 10 or 15 years is this reorientation of attention away from China's coast into the inland and western provinces. So you hear a lot of people talking about the China's new frontier. The inland provinces have all been growing faster than the coastal provinces for several years. You read all these stories about people relocating their factories to inland provinces to take advantage of cheap labor. There's all these massive infrastructure projects going on. And I really think that this boom in the inland provinces is one of the other things in the economy, along with housing, that's going to unwind a bit as investment slows down. So a lot of the investment, especially over the last few years, has been funneled into the inland provinces. The government has had these regional development programs for many, many years. They're very concerned about inequities across the country. So they've built some pretty impressive infrastructure far out in the west. But they've also developed some pretty severe economic imbalances in those provinces. The investment share of GDP for the nation as a whole is pretty high, almost 50%. If you look at the investment share of GDP for some of the inland provinces, some of them have 60-70% investment GDP ratios, which is very hard to see how that could be anything like sustainable. So I think this this story of China's new frontier has been one of the phenomena that's been driven by this investment boom over the past 10, 15 years. And I think as the investment boom cools down and the government is less able and less willing to channel huge amounts of funds into these regional development projects, they're going to see some retreat of this story. And this is, sometimes when I'm in a pessimistic mood, I call this the closing of China's frontier. So I think that the attempt by the inland provinces to sort of reclaim economic leadership is not likely to be successful on a kind of fundamental basis. And you're really likely to see the kind of traditional, more developed parts of China, essentially Beijing, Shanghai, and the coastal provinces, take over again as where the real action is. And one of the fundamental reasons for this is just the pattern of migration and urbanization. Right? So Chinese people are not dumb. They go where the opportunities are. And for the last 10 years, they've been increasingly concentrating in cities where incomes are high and job opportunities are great. And those cities tend not to be the ones in the inland provinces. So over the past decade, the Chinese population has gotten increasingly concentrated in the eastern part of the country, and specifically in large, prosperous cities on the East Coast. I'll throw a number at you here. So over this decade, 25 cities in China has about 300 cities, accounted for 60% of all urban population growth. So there's the distribution is very dramatic, right? So you have this huge share at like one high end, and it falls off very, very sharply. The bottom 100 cities in China essentially had zero or negative population growth. So you've essentially seen the population kind of reallocate itself from this very dispersed model into a more and more concentrated model. And so I think this phenomena really is going to really reinforces the traditional dominance of the rich coastal cities, and it's very hard for these government-led regional development programs to fight against this economic logic. And now that the government is much more indebted, or at least has a lot of off-balance sheet debts, which at some point it has to deal with, I think its ability to kind of fight against these dynamics is much more limited. So those are two kind of structural changes in the Chinese economy that I think that are already starting to happen. The slowdown and that plateauing in the housing market, the kind of reversal of fortune of inland China. Again, if you look at the economic growth statistics for this year, they're quite interesting. If you look at them on a provincial basis, so everywhere in the country slowed down, right? So the first quarter of the year was not great. So everywhere slowed down. But if you look at the coastal provinces, they slowed down fairly modestly. If you look at the inland provinces, they slowed down much more. Right? So the growth slowdown that China is experiencing now is not evenly distributed at all. It's very much more severe in the inland and far west. One example is Hebei province, which is the province that surrounds Beijing. maybe not traditionally considered inland, but it's very tied to the housing market because it's the biggest steel producer, not only in China, but if you take the rest of China away, it's actually the biggest steel producer in the world. So the biggest steel producer in the world is Hebei, and then the rest of China, and then Europe, and so on down the list. So Hebei's economic growth was about 4% in the first quarter, so half the national rate. There's another province up in the northeast, which is called Heilongjiang, so where my wife is from, actually. They're a big coal exporter, also a big heavy industry, resource-led province. They published first quarter GDP growth of 4.1%, and then a few weeks later they revised it down to 2.9%. So these are pretty unprecedented numbers for a Chinese province to publish. A good trend probably, and the provinces historically have not been very willing to print out these very low numbers, so maybe they're being more honest these days. But I think the reversal of fortune is going to be much more intense for some parts of the country than for others. So the counterpoint, I think, to this big slowdown in the investment side of the economy is essentially stability in the consumption side of the economy. Again, this is a really important development, and if we have this sort of disagreement among the people in the room between actually not very much disagreement, so everyone thinks it's going to be 6-7%. But basically, if you think China's going to grow at 6-7%, and I put myself in this camp as well, you're implicitly taking the view that if investment continues to slow, which we think it will, that consumption will not slow down proportionately, right? So investment growth is about probably about 7%. 7% now. Consumption is about 8%. So you put them together, you get 7.5, which is sort of where we are. If you think investment growth is going to keep slowing, say go down to 6, 5, 4, 3%, if consumption growth goes down with it on a one-to-one basis, then GDP growth is also going to go down. But if you think consumption and investment are more independent of each other, then you can have an investment slow down, have consumption hold up, and then GDP growth stays a bit better. So if you're betting on 6-7% GDP growth for China, essentially what you're betting on is that consumption is going to be resilient. Personally, I think this is a pretty reasonable view. If you look at consumption has slowed down quite a bit over the last few years, but compared to this breathtaking kind of generational transition in investment, it's been much more modest. So the average growth rate for household consumption in the national accounts have been about 9% in real terms. We're down to about 8-something, so not a big hit there. So I think that's it's important to be aware of this issue of the relationship between consumption and investment, because I think that's really what's going to determine the big economic outcome for China, this GDP number that everyone's so obsessed with. But I think the other thing to realize about China is that this phenomenon of the economic slowdown, of the growth slowdown, means that the most important the most important fact about China is not necessarily what the GDP growth print is going to be, right? So for in this investment boom years, a lot of what was driving the market dynamics and the economic impact of China abroad was the fact simply that China was growing very fast and that China was very big. And usually it's very rare in world history to see places that are A, very big, and growing very fast. And so all of the things that we think are so amazing and weird about China are basically a result of these two factors. Because usually you have fast-growing places, but they're small, or places that are big, but they don't grow much faster than the rest of the world. And China is sort of both at the same time. So I think but as China kind of gets out of this high growth era, it's no longer, the most important fact about China is no longer going to be that it's growing very, very fast. Right? The most important fact about China, I think, is increasingly going to be the structural changes that are happening in the economy, especially this change in the composition of growth from investment to consumption. And I think for investors, really what you probably want to look at are structural changes happening that are somewhat independent of what GDP growth is going to be. right? Since there's a lot of uncertainty about the future trajectory of GDP growth, you probably don't necessarily want to bet your entire future on whether GDP is going to be 6 or 7%, because very few people get those kind of predictions right, to be honest. But I think what we can have some more visibility about are structural changes that are happening that are not dependent on rapid GDP growth. So I think one of the probably most current examples of this, and I'm not making an investment recommendation here, but one of the most current examples here is the boom in e-commerce in China and the interest in all these in companies like Alibaba and Tencent, right? And I think the reason investors are so fascinated by these companies is pretty easy to understand. You've got a big economy that's going through a big wrenching transition. Growth is going to be much slower, but you have at the same time this structural change in how people are buying stuff. People are buying fewer things in offline stores and buying more stuff online, and this is basically this kind of structural change is going to unfold pretty much regardless of what the GDP print is tomorrow or 5 years from now. It really doesn't matter. It's not a phenomenon that's driven by growth necessarily. It's really a phenomenon that's driven by just the availability of these kind of technological options. So in that sense, you can see why people really want to avoid these kind of traditional plays on growth in China, like commodities and heavy industry, and concentrating these things that are taking advantage of structural changes that are not dependent on growth. So I think another interesting kind of structural change that's not super dependent on growth, and this may be a little bit counterintuitive, is in fact the consumption of the upper classes, for lack of a better term, so people in the high income groups. I think the key thing to understand here is that you can have very different dynamics of consumption within particular groups and for particular products, even if your overall kind of headline consumption growth numbers is not changing or is even decelerating. So the composition of this consumption growth is what matters. And sorry, let me back up a bit. So one of the concept that we use to kind of understand this is what we call the acceleration phenomenon. So a lot of consumption behavior seems to not change linearly, right? So that when people's income goes up by 5% a year, their consumption doesn't necessarily go up by 5% a year. It seems to people's consumption stays relatively stable as their incomes go, and then they cross a certain threshold, and then their consumption behavior changes very, very rapidly, right? So because the change in consumption behavior is not linear, and because it is seems to be driven by these thresholds, you can get these huge booms in markets for individual products, even when the overall growth rate of consumption is not that rapid. So if you have a huge bunch of people who all cross an income threshold at one particular moment, then they're all going to say, I want to go buy a car at the same time. They're all going to go want to buy a house at the same time. And that can be true even if their income growth was not particularly fast in that year. It's just when they cross the threshold that makes that determination. So if you kind of try to look at the consumption behavior of China using these thresholds, it's very clear that the past decade has been the era of what we would call, for lack of a better term, mass market consumption in China. So a lot of people have been kind of crossing into a middle class income threshold, and we define this as household income of about $14,000 US dollars a year. And when people cross this threshold, they start buying cars, they start buying a house, they start buying a lot of consumer appliances. And so these have obviously been the big growth markets for Chinese consumption over the past decade. And guess what? It lines up pretty well with these income changes, because that's where you saw the biggest numbers of people crossing the threshold over the past year. The interesting thing about China now is that so many people have crossed over into this middle class threshold that there's not that many people left who have yet to cross over into it. So the real growth, the threshold that's going to be more determinant of consumer behavior in the future is not this middle class one, it's really the upper class one. And again, in our research, we define this as about household income about $21,000 US dollars a year, sort of mass affluent level. And just to put just to put some numbers on this, we think that 18 million households a year will cross this consumption threshold over 2015 to 2020, even if GDP growth is 5% or below. Because it's really, again, how many people cross these income thresholds, it's really a function of the income distribution at the slope of the income distribution curve, and not so much of the growth rate of income. So even if income growth is much slower than it is now, you're still going to get a huge number of people crossing out of this kind of stereotypical middle class consumption band into a more upper class consumption band. And that's basically pretty good news for all kinds of mass luxury products. I'd say it's pretty good news for most services. So again, we've gone from an era where people have been buying a lot of mass manufactured goods, and a lot of the incremental consumption in the future is going to be of services, so healthcare, education, tourism. So again, these are kind of growth areas for the Chinese economy that I think are going to hold up relatively well, regardless of what the macro outcome is. Regardless of who is right about the GDP growth number, I think we can be pretty confident that the structure of consumption in China is going to increasingly shift towards the upper classes, again, for lack of a better term. So I think it's, for the past decade, it's really been the era of kind of mass market consumption for China, and I think it's kind of shifting into the era of high-end consumption. And the coexistence of this phenomenon with kind of slowing GDP growth overall, may produce some kind of interesting issues, right? So if you have, inequality is already a very live social problem in China, and if you have this, if you walk around the streets of Beijing, you will see, not a few fancy cars. In fact, I think I've learned more about fancy car brands living in Beijing over the last few years than I have about anything else. I'd never seen most of these things in person. You only see them in magazines, sort of Maybachs and things like this. In my housing compound, somebody just bought a purple Porsche, which I'd never seen one in my life before. So these fancy cars in Beijing are everywhere. And I think this kind of conspicuous consumption, given these income dynamics, is only going to become more and more prominent in China. I don't think it's not necessarily a negative phenomenon, not necessarily because bad things are happening in the economy. I think it's just a function of where China is in its terms of level of income. But it is kind of interesting contrast between the fortunes of this group of people and the fact that the economy as a whole is likely to slow quite a bit. So those are more or less the themes I kind of wanted to highlight as a ways to understand kind of where China is growing. So just to recap, growth is going to slow. By how much people disagree about, but we can be sure that growth is going to be slower in the past and in the future. Most of that slowdown is coming from the investment side of the economy. Housing is plateauing. The government faces leverage constraints, debt constraints. Its ability to deploy investment for public uses is more limited than the past. All of these things kind of combine to tell us that investment growth is going to be slower in the future. And so the real interesting dynamic in China over the next few years is going to be, I haven't used this word yet, but I'll use it now, the rebalancing of the Chinese economy from investment to consumption. And I don't use this, to me, rebalancing is it's not something that you say, oh, we're in favor of, or we think it's a good thing or a bad thing. To me, rebalancing is just a kind of neutral process of, well, we had a lot of growth coming from this part, and then from this part of the economy, it's going to go away over time. And so the economy is going to look very different just because the sources of growth are different. And so understanding that the composition of growth in China in the future is going to be very different than it was in the past is really crucial, and probably more crucial than just knowing that growth is going to be slower. And within that, I think there are some pretty good stories for consumption that do not depend too much on who is right about the GDP growth forecast. At least I hope so. So I'll stop there, and I'll take questions about anything you want, actually. So if you thought the presentation was boring, you can ask about something else.